Moving on, we have a question that's coming from Gnanesh on email, and he says that his 53-year-old son, his wife and daughter are Canadian citizens. Now they live with Gnanesh in Mumbai. Now the son wants to buy a home in Thane with a budget of 96 lakh rupees. He's already taken a 53 lakh rupees loan on a flat in Bengaluru, which has a tenure of 9 years left. Now Gyanesh's son is in the 30% tax bracket, while his daughter-in-law is in the 10% bracket. Now Gyanesh wants to know if his son can withdraw from the fixed deposit and make the balance payment. Also, can he take a loan against fixed deposits and meet the requirement? Or should he partially pay with surplus funds and a home loan? Additionally, is it better to clear the earlier loan and take a fresh loan? His son plans to rent out the Bengaluru flat. How can he save taxes on the rent amount? And also, will an HUF account be beneficial in this case? Lots of questions there. Ram, I think we should go with the home loan questions first. Yes. His son is 53 years old and falls in the 30% tax bracket. He already has a home loan running with 9 years left.
Right. So I think the first question is, should he pay off? Should he take a loan against the fixed deposit? I would suggest not. Mainly because bank would charge you anywhere 2 to 2.25% higher interest rate on the fixed deposit than what they give you, and there is no tax advantage on that loan either, which is available for a home loan. So you would not be advised to take a loan against your fixed deposit. You can of course break your fixed deposit, but I'm coming to that part now, which is should you pay off this loan or should you take a second loan? The main point here is the interest that you pay on a home loan up to the extent of 2 lakhs a year. Is deductible. You can show it as a loss on house property. And now you can do that for both your self-occupied home and your non-self-occupied home. Earlier, you could do this for your rented out home without limit. Now, the budget, the finance minister has just
sadly capped it.
Has made a limit of 2 lakhs on that also. But no matter, given that your homes are of the order of 50 lakhs or thereabout is your loan, you should be able to comfortably avail both the interest tax deductions of 2 lakh each on both the home loans. You would of course need to go through the procedure. The banks will verify if you are eligible and you can repay. You have the ability to repay 2 loans at once. But subject to doing that, your son can definitely take that loan.
Also, my question here is that his son is 53 years old and he already has a home loan running, which is 9 years left. What is his eligibility for a second home loan? And here I'm asking you from the age perspective, because banks are quite wary of lending to someone who's nearing retirement age, which is the case with Gyanesh's son.
Yes, of course. And I think given that, I'm assuming he's financially quite comfortable now, though he's already 53. Given that, banks, I believe, would be quite comfortable giving a loan till he turns 60, 62.
But the tenure would be
shorter.
Right?
The tenure would definitely be shorter. And of course, he would need to convince through his income statement to the bank that he has the financial ability to pay both the loans. Subject to doing that, an 8 to 10 year loan for him fresh would not be a problem, is the sense. And if you do that, then you can comfortably avail the tax benefit on both loans. And of course, you will get the rental income on one loan on one house, which you will have to show as income.
Now, you're not telling us how much money he exactly earns. They're just saying 30% tax bracket. He's looking at a loan of 96 lakh rupees, which is a huge sum for someone to take at the end of their career. Would you advise that you take a 96 lakh rupee loan?
The advantage here is, we are told that he has a fixed deposit in his name, and hence, he can of course look to break that fixed deposit and reduce the loan quantity by paying off more as down payment than the minimum that's required. So he can use a couple of measures like that. If he has any other liquid investments, he can try and pay that off and reduce the loan quantity. In any case, the finance minister has made interest beyond 2 lakhs that cannot be set off, and hence, he can back calculate to see, how much loan he can take, and the rest he can try to pay through down payment.
Okay, and one final question that Gyanesh sent: will an HUF account be beneficial in this case? Should the family go and make an HUF account?
I would suggest not. The point simply being that, while it does look more attractive from a tax perspective, I think increasingly in the recent years, taxmen have been quite stringent about how you use HUF, how you use gifts and so on. So, for example, he's also mentioned that his daughter-in-law is in the 10% tax bracket. So he can give a gift. His son can give a gift to his wife, and she can buy the property. But even then, the income from the property, the taxman would be quite valid in saying that he should pay at the 30% tax on the income. And similarly the HUF. So taxmen are quite stringent about how you show an HUF into existence and how you fund the HUF. So I would suggest it's better to keep it simple and take it on you can take it on a joint name if necessary and pay tax as per the slabs.
So so file your returns as an individual and not as an HUF in this particular case at least.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.